Thanks again for joining us today. I'm Marlon Bowling with you, and let's take a look at our market action with our quotes provided by Bar Chart. We currently have the corn market still under pressure across the board. We currently have the September contract on the corn down 3 3/4. Whoops, now down 4 cents. We're at 6.65 3/4, and that's well off of its earlier high of 6.72 1/4. December down 4.5 cents right now at 6.54 3/4. This thing is just kind of meandering around, if you will. It hasn't done much of anything during the course of the day. Remember, the July contracts actually go into first notice day on Friday. Well, soybeans, we have the August contract 6 1/4 higher. We're at 15.62 3/4, and you have November new crop now 6.5 higher, and we're trading at 14.69 per bushel out there. So a little bit of a firmer tone. Now moving on to the wheat. In Chicago wheat right now, you have September unchanged at 9.36. Now, a little bit ago, it had been higher. In fact, we're 20 cents off of our earlier high from last night. Now, what about in Kansas City wheat here? Well, we have September now trading 4 1/4 higher. We're at 9.94.5, but still off of our overnight high by roughly about 15 cents. Spring wheat trade, you now have September trading 1.5 lower. All the other months are just a little higher, though. December is up 2 1/4 cents. Wanted to point out the cotton market, too. We had a big move in the cotton earlier today, still do. December up 3.87. We're now at 97.35 per pound, and not that far from our high of the day, off of it by about 13 points. We're joined by Todd Bubba Horwitz of BubbaTrading.com in Chicago. And Todd, the markets just seem like they're just kind of biding their time until we get either to the reports tomorrow or the end of the month and quarter. What do you think about all that?
They took off for July 4th holiday already. We're closed. I mean, the traders have left the building. You know, I think that we're in typical kind of action, you know, going into the holiday weekend here. You know, more often than not, we kind of spike into the July 4th holiday, especially if there's hot and dry conditions, which we kind of have. But we had such a big move already, and we're just kind of swinging around in pretty big ranges. And, you know, again, I think they have to go a lot higher, but, you know, we're way too early to start to recognize the shortages we may have, the weather problems we may have. And, you know, so the action is kind of dull, and it's really a lack of volume in every market, including the grain.
All right, so we had the GDP number that came out this morning, down 1.6%, I understand, for the first quarter of this year. Not a good sign when it comes to the economy. Do you think that's going to affect the investment money that's coming into the ag sector or not?
No. I think that, you know, again, I think if you've watched the equity markets start to break down again, that money's going to flow into the grain markets and other commodities. I think we've seen a little bit of a pull out of the commodities with the recent rally. And I think you're going to see the money flow right back there because that's the greatest alternative investment that funds look for, you know, the grains and other soft commodities. And I think that's where we're going to end up. And I do think we're going significantly higher, but it's not going to be easy. And the market doesn't announce itself and say, hey, buy them now, we're going a lot higher. I think that, you know, just got to be protected, be in, and not worry about it, and just know that, you know, based on all the information we have, there's going to be a big demand when I don't know that we're going to have enough supply.
Well, that's a good point. I'm glad you brought that up. And in the meantime, we're going to take a break right here. Todd, thanks for the help. Todd Bubba Horwitz of BubbaTrading.com. We're going to come back in just a minute, and we'll take a look at our livestock trade next.